And we are back again. Welcome to School for Startups Radio. We appreciate you being with us. It is Tuesday. Normally on Monday, we have a stock market update, but because the markets were closed yesterday, we decided to do it today and hope you had a fantastic Memorial Day. But we are now ready for our Wealth Within weekly update with Dale Gillham. Dale is Australia's #1 wealth analyst, financial planner, stock guru. He's a super sought-after keynote speaker and also a best-selling author of How to Beat Managed Funds by 20% and also Accelerate Your Wealth. It's your money, your choice. He is, of course, the founder and executive director of Wealth Within. Dale, welcome back. How you doing this week?
I'm really good, Jim. Just got a little bit of a cold because it's winter here in Melbourne, but I caught it up in Queensland, which was your version of Florida. So I went to the warm and caught a cold, so my voice is a bit croaky today, but outside of that, I'm feeling fantastic.
Well, I hope you recover soon. I have actually been to Queensland scuba diving myself, and it's one of the most beautiful places on earth. So I hope you had a good time and recover. Let's get down to business. The market was down last week. Again, is this 5 or 6 weeks in a row that the market has been down? Does that mean anything? Is that an indicator of anything big coming?
Not really. The market does that anyway, and it depends on whether you're talking about the Dow or the S&P. The S&P is down for about 4.3% since the 1st of May. So it's high. It made an all-time high on the 1st of May. So it's been down about 4 weeks, 3-4 weeks. The Dow's down about 4.16, which is not very much. So you've got to look at it like that. With markets, they rise for 4, 5 weeks, fall for 2, 3, 4 weeks, rise again for 3, 4, 5 weeks. That's what they do. They rise. They go up in stairs and come down in elevators, as they say. But 4% down, it's not really a lot. Normally the markets will make 2 lows a year. So they'll probably fall between 8-12% twice a year. About every 4 years they fall about 15 to 20%, and then every now and again they have larger falls. So I think the Dow and the S&P, they can go down another 4 to 6%, and it really wouldn't worry me at all at this stage. But they don't look like they want to go down, and they're holding up really, really nice. So would not be worried at all.
And we're still ahead for the year. Is that correct?
Oh, yeah, absolutely. Both markets are up for this calendar year and looking good. And as I keep saying, like the other week, I said, I don't think they can crash because right now the whole economy is doing okay. Things are happening in the US, but the market signs aren't there for a crash. So I think they're going to continue to rise on. And I think the Dow will make a new all-time high this year. And I think the S&P, after a little bit of a fall, which it's having now, will turn around and start to move right back up and be very, very nice.
And our trade war with China now has a more specific name. One of our telecom manufacturing companies, a cell phone company. Explain what's going on with this particular company.
Well, you're looking at with the China-US trade war, obviously the Huawei is one of the big players for China, obviously, and we've got Apple. China makes all the Apple phones and a lot of Apple products. So it's very, very important for the US and China to work this out. But from what I believe, Huawei don't do too much in the US. It's great for Australia, the US-China trade war, because China's actually buying a lot more stuff off Australia, like liquid gas and beef cattle. They're buying that off Australia. So it's helped our market here in Australia, but it's not quite as good for your market. But really, I think Trump's actually lessened the rhetoric, I suppose, if you talk about with Huawei for the US and everything else, which has seen a really bit more positive news back there. And obviously with Apple at this point in time, there's a little bit of news around Apple at this point in time. It's fallen 10.81% because of those implications over that trade war. And you've got HSB came out and did a reduced outlook for that. But to me, when somebody like HSB comes out with a reduced outlook for a stock, that tells me to go out and look at buying, because I think Apple has a bit more to fall, and it possibly could fall to about 160 or 144, and it's got super, super strong support at $116. But I don't think it'll get that far. I think when you're getting big broking houses saying they're reducing their outlook for some great stocks like Apple, that tells me to start looking to buy them, because quite often the big end of town get it wrong in this stuff. So, but all the FANG stocks are looking better in my point.
All right, so let's jump into the FANG stocks. Facebook, Amazon, Netflix, Google, all of them looking good right now. Do you see that continuing? Facebook, a lot of news about them this week. We want to talk about their cryptocurrency in particular.
Yeah, that's quite interesting. I mean, I've got on my live YouTube show later on today, I do one for Australia at night in Australia, and I'm going to be talking about cryptocurrencies and stocks. You know, what should you be doing? And but the Facebook one is quite interesting. I mean, Facebook have a lot of issues at this point in time. Like, obviously, a lot of people have pulled away or closed their accounts, mainly people under 35, but they're the same people that are buying cryptocurrencies, and Facebook come out and said they're going to launch a cryptocurrency, but they're not really sort of launching a real cryptocurrency. They are dealing with banks and other licensed institutions. And you need to be careful with cryptocurrencies, because with a cryptocurrency, they're not necessarily legal tender, if that makes sense. Governments around the world will not ever have a cryptocurrency that's not regulated. They need to regulate currencies, governments do, because of criminal activities, those sorts of things. They also need to track activity because of people, or they need to identify who makes transactions, obviously for taxation purposes, and a whole lot of other reasons. So Facebook getting into this, there's a lot of regulatory hurdles they've got to get through. And I think there's going to be a lot of issues they really will face before they bring it out. But it's probably more like, how do I say it, like a wallet, a digital wallet, where you might have some crypto coins in there and be able to buy and sell a few things. But I think there's a long way to go before anybody around the world treats cryptocurrencies as mainstream and good currency for people to have. So, but I don't think it's going to really help Facebook's share price at this point in time. It's been going down a little bit. But again, FANG stocks, I do like FANG stocks for the medium to longer term. They had big falls last year of 25, 35%. And I think they're all sort of turning around now and doing okay. They're all up for 2019, and they're all looking quite good at this point in time. So right now, to me, it spells opportunity.
All right, I know another one of the sectors that you've been watching very closely is the chemical space and Dow. Talk to me about what is going on there, please. Very interesting story. Dow and DuPont.
Well, yeah, Dow DuPont is the biggest chemical conglomerate in the world, but right now it's down around about 21% this month, and it's because its profit slumped 28%. And its quarterly profit. So, but DuPont plans for $2 billion buyback after spinning off from Dow DuPont, and their plans to split off into 3 companies. And so what's happening now is they're splitting up their company, which spells opportunity, obviously down 21%. When a stock like this, big Dow Jones index stock like this, falls 21%, that's interesting to me, because as Buffett says, buy in doom, sell in boom, and it doesn't get much doomier than what we've seen with Dow DuPont. The buyback really will support the stock price. That means they're going to take up their excess cash and start buying into that stock and reducing the amount of stock available. But the 3 units it's going to spin off to is going to be called Corteva, which are agricultural seeds and chemicals, DuPont, which is their specialty chemicals, and Dow Chemical, which is commodity chemicals like polyethylene and silicon, etc. So to me, that's really exciting. So when they're splitting it off, anybody that owns Dow DuPont will possibly get shares in 3 separate companies. And generally what you'll see is those companies rise at least short term, if not more medium to long term, as the split further the way they get from the split. So I think it's a real positive sign for Dow DuPont at this point in time, and one to have a really good look at.
You know, Dale, I'm not very smart, and so I don't understand one thing. If you have a company that's losing money and decelerating, how does splitting it into 3 companies solve the real intrinsic problem that the company is obviously having?
Yeah, it's a really, really good question, Jim, and it's one of those ones that's always hard to understand, and sometimes splitting it off actually helps the companies, the smaller parts, because the focus is on the largest part of the company, and so the smaller divisions may not be getting the attention they need. There may be economic factors that are holding those back again. So you might find, for example, in Australia, we had a hardware chain and a supermarket chain joined together. Now, the supermarket was holding back the hardware chain. As soon as they split off the supermarket side of it, the hardware chain took off like a rocket. So that's why I'm suggesting is at least one of these three divisions will take off doing really, really well. The other ones may do better as well because they'll be a little bit more stealthy, if that makes sense. They'll be able to move and change a little bit quicker and adapt to the market and the economy a little bit easier because they're not such a big entity anymore. So it's quite exciting times, I think. Obviously, it's a little bit speculative what I'm talking about, but it remains to be seen looking at exactly all of the details of all those three entities, looking at what they're doing, what their outlooks are, and looking at them individually. But hey, as I said, generally a split off like this can be good for the stock price of at least one, if not multiple units.
And Dale, we only have about a minute or two left. There was a report this week in the United States about CEO pay, sometimes 1,000 times higher than the average employee pay. And for example, the Discovery Channel CEO, $130 million. I'm a capitalist. I love capitalism. At some point, are we getting out of balance, even for us capitalists? Is that possible?
Oh, absolutely. It really, really is. I can't understand how anybody's worth $10 million a month to me, but it's not always about being...
Dale, I'm worth $10 million a month, and you are. The two of us are worth $20 million a team. Easy.
Oh, absolutely. we give people lots of value, but I find some of those CEOs, the share prices tank, and they still get tens of millions of dollars a month, and I think there's a bit of an issue there with that because obviously a lot of people are really complaining about high prices in lots of areas. And part of that is paying these very, very high executive salaries. And so how much is a company worth and how much is the CEO worth to deliver that? When, I really have a problem with all of that. So whilst I'm very left, right wing and I'm very much a capitalist, you still need to look after your workers and pay them well. And if you pay them well, you get better products, you'll get better clients, and everything will do well. But I think that's a bit rich, $120 million.
Yeah, I have a hard time paying a baseball player that or a CEO. And again, I'm a capitalist, and I deserve $10 million a month, but not a lot of other people. Dale, we only have a second left. Market up or down this week? What are your predictions for the next week? Up or down? Short week, only 4 days.
It is only 4 days, but I think it's going to go up.
Okay. Excellent. Well, we can hope so, and I hope you feel better, Dale, and we will be back next week with another Wealth Within weekly update. We will be back. Dale, thank you so much for being with us. We are out of time here on the radio, and we'll be back next week with more School for Startups Radio. Bye now.